Here to discuss the AI stock rally and what Salesforce's results might tell us is Paul Meeks, Independent Solutions Wealth Management Portfolio Manager. He's also a finance professor at the Citadel. Paul, good to see you this morning. We mentioned all those year-to-date gains from some of the big companies exposed to the AI trend. Of course, a lot of that for some of them was just taking back the losses of last year. But right now, as we look ahead to Salesforce's numbers, how does that one look set up to you in terms of what the fundamental story is, whether this sort of AI opportunity is priced in, or is it maybe been overplayed?
I think, Mike, it might be overplayed. As you mentioned, the stock's up 60%. And at least for the near term to intermediate term, Salesforce is a cost-cutting story. It's not a revenue acceleration story. Remember, activists came in and poo-pooed the company for so long, focusing on revenue growth at the expense of profits. And so now what I need to see is 10% revenue growth. That's what analysts are expecting this quarter, this fiscal year, next year. I would like to see some more details about their AI offerings, but I don't think they're going to be significant revenue contributors for some time. So the key is, do they continue to rationalize costs? Because when they reported their last quarter, their operating margin year to year went up 900 basis points to the high 20% range. And in the past, they were lucky to be plus or minus break even, at least on GAAP results. So that's what I need to see. The company back in January announced that they're cutting 10% of their workforce. They took out their co-CEO and other senior executives. They rationalized their office space. So this story is somewhat driven by AI, like others, but it's more driven by continued cost rationalization.
A big theme for a lot of the cloud services vendors of various types has been customers trying to be more disciplined about their spending on those services. They talk about optimization as the euphemism. What does it seem like that means for Salesforce at this point, and I guess more broadly for enterprise software?
So Salesforce probably doesn't get much of an AI pop in that regard, because we need to see a second to third tier effect when we start to see AI in software applications. AI right now is all about the picks and shovels, the semiconductor companies like Nvidia and AMD that are allowing the training of the large language models and then the inference of those models, followed by the hyperscalers. Right, the hyperscalers like Amazon Web Services and Microsoft Azure. So I don't think that necessarily a CRM is a beneficiary just yet. Again, they're further down the AI glorious supply chain with their apps. Do want to see them talk a little bit more about that today. They introduced them last quarter, but they won't be benefiting from either the semiconductor theme or the hyperscaler theme, which I think are the 1-2 punch in AI for the time being.
So much attention in the last week over Nvidia, the blockbuster quarter, but then perhaps the lukewarm market response to it. Do you have a read-through on that? I mean, I look at it and say Nvidia has basically held on to the massive gains it's had this year. It's not as if it was a pure sell the news response, but what does that indicate to you?
It does indicate to me that obviously this company is doing so well, 70% market share in AI chips, and AI chips is essentially the driver of all of AI right now and technology. Yes, you're absolutely right. We didn't have, despite the beat and raise, and it was another big beat and raise, we did not have a big pop, but also the market was down that day. So to consolidate its gains when the stock has already tripled this year, I think is pretty good. And I actually think there's still upside in Nvidia because its numbers were upsided so much. And if you take a look at its PE ratio, which is elevated, but versus its growth rate, which is explosive, I probably can find other stocks in technology that are more expensive on that basis. So I'm still a fan of Nvidia.
I guess the real question is, let's say you go beyond the next few quarters, is what's the longer-term sustainable spending rate? You already have a near $1.2 trillion market cap. The customers are running furiously to build out their capacity. And I think the question is, are people stockpiling? Is this an artificial reading on the level of long-term demand?
Yeah, you definitely worry about that with a semiconductor company of any stripe, right? The over-ordering. And in the case of Nvidia, we do have AMD coming. Now, AMD used to be a crappy company, but now it's a well-managed company. And when they say they're going to drive their own AI chips for release in the second half of this year, I believe they will. And I believe the specs on the chips will be pretty good. So, yes, you're going to have to watch Nvidia over time. But I do think that their early runway, and it's long and wide, I do think that they will be sold out of their chips, as many as they can sell, for quite a while, at least through next year.
I mentioned Alphabet had been a recent outperformer. It's actually gone back to trading at a bit of a premium valuation to Meta again. People feel as if it's finding its way, not just with the AI opportunity, but even the broader kind of YouTube and media strategy. And they have, of course, had their next conference yesterday. What's your thought on Google here?
So I like the relationship that they forged with Nvidia. It's power. But I also know that we'll continue to see Alphabet do a pretty nice job of rationalizing their own costs. Remember, that was part of the theme at the beginning of the year, the year of efficiency. But the key here is that digital advertising has rebounded. And unless we have a recession in 2024 that is long and deep, I think it's going to happen, but I think it's going to be short and shallow. If the digital advertising market holds up, which until further notice is the legacy revenue driver for that company, I think they'll be okay. And in the meantime, the stock isn't egregiously valued.